What is object costing? Well, object costing is an approach where you try to identify specific things, either an activity or an asset, and you compile all of the costs that relate to that activity or asset. And so you can use that activity or asset as an allocation device. That is, you would be able to then identify the amount of activity or asset involved in any production process so that you'd be able to allocate all of those costs associated with it to that overall allocation or process. So obviously this is a method that's used very highly in activity-based costing, because in the ABC method you are identifying the activities that go into the production of a product. So if you've done object costing where you've identified specific objects, the activities in themselves, and you've identified all the costs that go into those activities, you have a cost metric there to apply to the activity-based costing. Okay, now there are all sorts of types of object costing you could do. Your output related, which is related to products or services that you output, so you can allocate once again cost to that. Right? It can be operational objects like your department, your processes, something like that. Right? You can allocate once again a level of cost to each of these so that you have a standard unit. And then there's even business relationship costs, and these are basically the costs associated with meeting the expectations of third parties outside of the organization. So again, you have a standard metric there for that. So really, the reason people do this is it's beneficial in terms of for management decision making. So one, you can manage cost effectively, and it can be better for budgeting and deriving a baseline cost for purposes of pricing. Right? So if you identify what you've got into it, if you were to do, say, cost plus pricing, that would again help you have that baseline necessary to derive the price from your costs that go into a product or service. So anyway, this is object costing and how it's used.